A few years ago, I closed a bank account. Not because the bank did anything wrong, because they wanted 750 euros coming in every month just to keep the account open. And if I missed that threshold, they charged me fees. On top of that, a credit card I didn't really use. Staff services I never asked for. Monthly charges for things I didn't understand. I sat down one afternoon and worked out what that account was actually costing me. The number surprised me, not because it was enormous, but because I was paying it for absolutely nothing in return. I closed the account, opened a new one the same afternoon. No monthly fee, no minimum deposit, no conditions. And I've never thought about it since. If you're still with a legacy bank that makes you jump through hoops just to use your own money, this video is for you. Quick note, this is not financial advice. Always do your own research. Bank features and fees change regularly. Always verify current terms at each provider's official website before opening an account. Here's something worth sitting with. Every euro you pay in unnecessary bank fees is a euro that doesn't go into your investments. If you've watched the compounding video on this channel, the one about Munger's milestone, you already know what that means over 30 years. A 10 euros monthly fee is 120 euros a year. Over 20 years invested instead of paid to a bank, that's not nothing. That's the hidden cost of banking nobody ever talks about. Because it's small enough to ignore month by month. And that's exactly how banks want it. Traditional European banks built their fee models around physical infrastructure. Branches, staff, paper processes, monthly fees paid for that infrastructure. Neobanks removed that cost structure by removing the infrastructure. Digital only, no branches. The savings passed directly to you. And here's the thing that stopped me in my tracks when I first looked into this properly. These are not startup apps with venture capital money and no regulatory oversight. We are talking about fully licensed European banks with EU Deposit Guarantee Scheme protection on deposits up to 100,000 euros. The same protection your legacy bank offers, for zero monthly fees. That changes the question entirely. The question is no longer whether you should switch. The question is which one fits your situation. And there are three very different answers depending on who you are. Rather than ranking accounts from first to last, because that's not how real decisions work, I'm going to show you three types of European investor and which account makes the most sense for each one. One of these is almost certainly you. Profile 1. The everyday EU citizen. You earn a salary in euros. You spend in euros. You want a clean account with zero fees, zero overhead, and an app that actually works. Profile 2. The investor. You invest regularly in ETFs and you want your banking and investing in the same place. Profile 3. The cross-border user. You live, work, or travel across multiple European countries. You deal with multiple currencies, you felt the pain of hidden foreign exchange markups, and you need an account that doesn't punish you for being mobile. Let's start with the most common one. If you just want a bank account that works, no conditions, no surprises, no fees, Revolut's standard plan is the hardest option to argue against. It's free. I don't mean cheap, I mean free. No monthly fee, no minimum deposit requirement, no condition about how much has to come in each month just to keep it open. That alone already beats most traditional European bank accounts I've ever had. You get a full EU IBAN, the same format your employer can pay your salary into, the same format for SEPA transfers. You get a debit card, interbank exchange rates, up to a fair use monthly limit, instant spending notifications, savings vaults, and real-time categorization of every transaction. Most traditional banks charge 5 to 15 euros a month for a comparable account with fewer features. For a basic investor who wants a clean, zero-cost current account for their salary and monthly ETF contributions, the free tier is enough. One thing worth knowing: Revolut holds a Lithuanian banking license. Deposits are protected up to 100,000 euros under the EU Deposit Guarantee Scheme. For balances well above that, use Revolut for day-to-day spending and keep larger savings somewhere else. Now, if you're already investing in ETFs every month or you want to start, there's an option that takes this further. And it's one most people don't think of as a bank account at all. Trade Republic started as a broker, a way to buy ETFs cheaply. €1 flat fee per trade, one of the lowest in Europe for UCITS ETF purchases. Free savings plans with no per trade fee at all. But over the last couple of years, it has quietly become something more. It now offers a full bank account alongside its investment platform, German IBAN, debit card, and SEPA transfers. One important thing to flag: the EU banned payment for order flow on June 30, 2026, the revenue model that helped fund Trade Republic's €1 fee. Since July 1, 2026, Trade Republic executes orders on its own infrastructure, acting as its own counterparty. The €1 fee has not changed, but the model is only weeks old. Independent execution quality data is not yet available. Check Trade Republic's current terms before relying on this video for the latest fee structure. For a European investor building wealth through regular monthly contributions, Trade Republic's combination of banking and investing in one platform is worth taking seriously. But what if your life doesn't fit neatly into one currency? What if your income, your spending, and your country of residence are three different places? That's a completely different problem, and it needs a completely different solution. I want you to think about something for a second. Every time you spend money in a currency other than euros, your bank is making a decision about what exchange rate to give you. And almost nobody reads the terms carefully enough to know what that decision is costing them. Wise is built on one principle. You get the mid-market rate, the real rate, the one you see on Google, with a clearly disclosed fee on top. No hidden markup buried in the exchange rate. No surprises when you check your statement. For comparison, N26 standard and smart accounts charge a 1.7% conversion fee on foreign ATM withdrawals specifically. Card payments abroad are free on N26, but if you take out cash outside the Eurozone, you pay that fee. Wise supports over 40 currencies and gives you local account details in approximately 10 of them, including euros, British pounds, and US dollars. If you receive a salary in pounds and live in France, Wise is the obvious answer. One important distinction: Wise holds an e-money license, not a full banking license. Your money is held in segregated accounts and is not covered by the EU Deposit Guarantee Scheme. Use Wise for transactions and currency management, not as the place where your savings live. Before I tell you what to actually look for when comparing any of these accounts, there's one trap that catches almost everyone, and it's hiding in plain sight. 4 things worth checking before you open any bank account in Europe. First, deposit protection. Is the account covered by the EU Deposit Guarantee Scheme up to 100,000 euros? Full banking licenses provide this. E-money licenses don't. That distinction matters for where you keep meaningful savings. Second, foreign exchange fees. Not all foreign transaction fees are visible in the headline terms. Some are buried in the exchange rate itself. Always check how the provider converts currency before you spend abroad, not after. Third, ATM limits. Most free tiers offer limited monthly ATM withdrawals, typically 200 to 400 euros before charges kick in. If you use cash regularly, this is worth calculating before you switch. Fourth, and this is the one that catches people, the paid tier trap. Free accounts are genuinely free, but these apps are designed to make the paid tier feel necessary once you're inside. More insurance, more cash back, more currencies. Know exactly what the free tier includes before you convince yourself you need to upgrade. Staying on the free tier is almost always the rational choice for most users. Here's the part everyone overthinks. Switching banks in Europe is easier than you think. Most neobanks complete identity verification in under 10 minutes. A photo of your ID and a short selfie video. The account is usually active within hours. The steps are simple. Open the new account first, then redirect your salary or standing orders to the new IBAN. Redirect any direct debits. Keep the old account open for 2 to 3 months, while remaining payments migrate across. Then close it. The fees you stop paying start saving you money from the day you switch. And unlike most financial decisions, you don't have to wait years to see the results. It shows up in your account the very next month. Now, we talked about what your bank account costs you and how to stop paying for nothing. But there's another cost that most European ETF investors are paying without ever seeing a bill. It's not a bank fee. It's buried inside every ETF you own, and the number on the label is not the number that matters. I covered that in detail in a previous video. Link is in the description and on the end screen. If you haven't watched it yet, that's the one to go to next. Your bank account is the foundation of your financial setup. If it's charging you monthly fees for services you can get for free, that's money leaving your future every single month. The accounts I've covered today are all free to open and free to run. The one that's right for you depends on how you use money, not on which one has the best marketing. If this was useful, the free European ETF investor checklist is in the description. 7 things to check before you invest in any ETF. Takes 5 minutes, free. Money is a tool. If you don't learn to control your finances will control you.